Matthew Hougan from Bitwise. You are representing one of the major ETF providers in the States.
Yep.
And last year there was a really breakout year for you guys and for the whole industry. And how important was that moment when the ETFs was approved?
Oh, it was absolutely enormous. You know, Bitwise was founded in 2017, and we designed crypto products for institutional investors. And in our first 6.5 years, we accumulated about $1 billion in assets. From the time the ETF launched to today, we're up to about 15. So that tells you the scale of the impact. It changed things in two ways. For one, it made it easier for institutions to buy Bitcoin. It was hard for them to buy it before it was in an ETF, but just as big, it provided that stamp of approval from the US regulator that this was a reasonable asset class to include in institutional portfolios. And you put those together and you get this enormous growth.
What about Europe then? Because there the ETPs has been approved for 5 or 6 years or something, and why this difference?
Yeah, Europe has been the leader in ETPs, and there's a real business in Europe. Bitwise does business in Europe. We have a suite of ETPs here as well. The US is the world's largest capital market, and I do think that as the largest financial regulator in the world, it mattered even to European investors whether the SEC looked upon it favorably or not favorably, and that was rational. If we think crypto is going to penetrate how global finance works, it's going to be hard for that to happen if the US didn't allow it to do it in its markets, some of the largest banks in the world. So I think it was a win-win for both geographies. And look, I'm very bullish on European ETP assets as well. I think they're going up significantly too.
What about the different asset classes? Because when you have an ETF or ETP, it's sort of pegged to Bitcoin or another type of crypto. And then you have the tokenization event trends. You even have the treasury company events. So there's a lot of ways that an investor can invest in crypto, independent of the spot. How do you see these different markets?
Yeah, I think it's great that they all exist. They all still serve different users. You know, digital asset treasuries provide sort of like leveraged exposure to crypto. That's great for a certain type of investor. Single asset ETPs are great for another type of investor. Tokenized or direct ownership may be better for a younger or more crypto native. The important thing is that everyone can access it in the way that they want. I think over time you're going to see this market change and mature. On the ETP side, I think you're going to see more index-based solutions gain traction. On the tokenization side, I bet you'll see a lot of tokenized funds that combine equities and crypto. But again, there are all sorts of different investors out there. A sovereign wealth fund versus my uncle may want a different way to access the market. The great thing about what's happened in crypto is that now they all have their choices. And you just have to pick the right one for you.
In this industry, you could say that the retail led the way.
Yeah.
Maybe different from a lot of other industries. But are the institutions, are the wealthy investors, are they now on board?
They are coming on board, I would say. So we actually have a fun way of measuring this in the US because we can look at our ETFs and we know from SEC filings what percentage of them are held by institutional investors and therefore what percentage are held by retail investors. When they first launched in the first quarter, it was about 10% institutional, 90% retail. So even for ETPs, it was mostly retail. But that 10% is now about 28%. And it's on its way to being 50%. So they are coming for sure. That's clear in the data, but most of them still aren't here. It's still early. That will take a few more years, but I think we'll look at that number in a few years. It'll be 60 or 70% institutional.
These ETFs events, was it a one-time event or will it just continue to grow? How big can it be?
Yeah, I think it's going to grow substantially. I actually don't think it was a one-time event at all, and there are two reasons for that. One, what's the first time you bought Bitcoin? Have you bought Bitcoin since? I think very few of us bought Bitcoin for the first time and never touched it again. For that reason, the people who already bought Bitcoin ETFs, guess what? I think they're going to buy more. But the bigger thing is if you look at the history of ETFs, and I come from an ETF background, it's always the case that year 2 is bigger than year 1, and year 3 is bigger than year 2, and year 4 is bigger than year 3. The gold ETFs, maybe the closest analog to the Bitcoin ETFs, they had a great first year, 3 billion inflows. Year 2 was 5 billion. It peaked at about 18 billion in year 8. every sign I look at suggests that Bitcoin ETFs and other ETFs are following that same spectrum. So I know we did great last year. We had 36 billion in inflows in the US. I think we'll be at 40 this year. I wouldn't be surprised if we're at 50 or 60 next year. I actually think we're just getting started, and it's going to get much bigger from here.
And one question about the market, because right now we are in Barcelona for the European blockchain convention.
Yeah.
Just more or less a week ago, there was a really big crash in the market. Have you thought out what happened and why did it get so big?
Yeah, I think there was a lot of leverage that built up in the system. The open interest exceeded $100 billion on leveraged instruments for the first time in crypto's history. And crypto is a volatile asset. When you mix high degrees of leverage with volatility, you take on risk. I think for long-term investors, the important thing to note is it didn't change the trajectory, right? If you were my ETF investor, it closed on Friday when Bitcoin was at 117,000 US dollars, and then it opened on Monday when Bitcoin was at 115,000 US dollars. That's nothing. That's like a normal move. The whole weekend didn't exist. It really impacted short-term traders. Behind the scenes, we could dig into it. There were some infrastructure issues, there were some things that didn't work perfectly, but generally speaking, I think it cleared reasonably well. So this was an event that affected leveraged speculators, and it didn't affect the long-term story of Bitcoin. And I think we have to get used to those two markets coexisting.
So are we back on track on the bullish future?
We're definitely back on track. Look, that was a blip when you compare it to what's going on globally with rising interest in the debasement trade, concerns about the outlook for fiat currencies. You see gold at $4,200. You see global M2 at all-time highs. You see institutions allocating to Bitcoin. Those are much bigger forces than speculative traders losing money over the weekend. I feel bad for them. They suffered in some cases because of system faults, but it's not derailing this big story. This Bitcoin debasement trade is a multi-year story, and I'm very bullish into the end of the year.
Someone also said that it sort of proved the decentralized trend or solutions.
That's a very great point. Actually, the decentralized exchanges performed better than the centralized exchanges. The reason for that is that they're built to be in the most adversarial environment, and they're built with high quality code. I do think it endorsed the way we're going. Look, these are all stress tests. We're building a whole new financial ecosystem. We're talking about tokenizing all of the world's stocks and all of the world's bonds. That is the same system that we were testing this weekend. Did it work perfectly? No, but did it work pretty well? Given the scale and the volatility, I think it worked pretty well. And DeFi worked particularly well. So yeah, maybe there's a bullish case for DeFi out of this weekend.
Thank you very much, and we look forward to see how the development goes forward.
Yeah, thank you for having me.
Thank you very much, Dan.
Appreciate it.
Thanks for listening to this episode from Kaupr. If you enjoyed the conversation, subscribe to the Future of Finance podcast, available both on-chain and on your favorite platforms. And remember, Future of Finance isn't just a podcast. Sign up for your newsletter to get news, deep dives, and insights, and to be the first to know when new podcast episodes drop. Stay connected with us and never miss an update.